Basically, the ability to tolerate volatility is somewhat of a privilege. Basically, the more financially comfortable you are, the more you can say, I'm willing to
Exactly.
hold something for the next 4 years. Whereas stablecoins, you can kind of think of them as your checking account
hmm
if you're in one of those environments where dollars are useful.
A major shift is taking place in the Bitcoin ETF market with a $418 million investment spread across multiple funds, including a $238 million stake in BlackRock's iShares Bitcoin Trust. This development is consistent with the SEC's growing openness to mainstream Bitcoin exchange-traded funds, suggesting a possible bullish momentum for Bitcoin prices, according to investment experts. In an interview with journalist Paul Barron, Lyn Alden recently talked about the potential of Bitcoin as a store of value, as well as the difficulties associated with volatility and regulation. She also highlighted PayPal's entry into the stablecoin market with PUSD, which has rapidly grown to a valuation of $500 million, while established players like Tether currently control the market. Despite these complications, Lyn Alden stressed the potential impact that changing regulations and the emergence of yield-generating stablecoins could have on the market. According to Alden, favorable legislative changes and growing institutional interest might soon propel the price of Bitcoin higher. View snippets of the interview to learn more about Lyn Alden's exchange with Peter McCormack.
Yeah, so historically, Bitcoin and stablecoins have kind of been the two killer apps of crypto, right? They're the two things that have really caught on with traction through bull markets and bear markets alike. Bitcoin is an emerging store of value. Basically, it has superior monetary properties than most other monies we're familiar with. But because it's still small, it's still not widely held.
hmm
People try to build leverage on it. It goes through these cycles. It's volatile as it reaches its whatever its total addressable market is, or as it gets close to what it eventually will be. Stable coins are just dollars in digital form. It helps serve the need for dollars globally. The demand for them, and there's two main use cases of stable coins. There's one that's basically the unit of account for trading and DeFi on various crypto platforms. A lot of that's going to be on Ethereum, and then the other big usage of stablecoin is basically demand for dollars in the global South. Much of
Right.
it's satisfied by Tron, so there's almost like two different worlds of the same asset. As a near-term temporary store of value, like working capital, that's where stable coins are very useful. Basically, the ability to tolerate volatility is somewhat of a privilege. Basically, the more financially comfortable you are, the more you can say, I'm willing to
Exactly.
hold something for the next 4 years. Whereas stable coins, you can kind of think of them as your checking account
hmm
if you're in one of those environments where dollars are useful. So thus far, network effects have been shown to matter. Liquidity kind of begets more liquidity. And so far, Tether's network effect in this has been pretty remarkable, probably
Right.
stronger than I would have guessed. I've also been watching some of the yield generating stablecoins, or you can kind of think them as tokenized T-bills, things that try to pass on the yield to the holder rather than the yield being captured by the issuer. And even them, I mean, they've grown, but they're not exactly capturing market share very quickly.
Right.
And so network effects are clearly pretty strong among stablecoins. And I don't have a firm view on how many there'll be or how much those network effects will entrench, because some of it is like a Boolean outcome of regulations, So
hmm
some of the onshore ones try to, turn the arm of the state against the offshore ones, and you kind of go back and forth there. So there's some outcomes that I wouldn't try to predict. I do think it's rational for these various entities to try to get into the stablecoin market, given how big and potentially
Right.
profitable it can be. But it's hard to judge the outcome. So I think that given status quo, I think Tether's in a very strong position. I mean, a prime dealer now, for example, has been more supportive of Tether than the rivals onshore. And so, given like an absent of very strong efforts to change that, I think the status quo likely continues. I think that domestically, obviously, some stable coins could continue to gain market share, but globally, Tether is so far in the lead that it would take pretty heavy disruption for that to change. So my assumption is just current momentum continues.
As Bitcoin spreads more widely and becomes less concentrated among a small number of holders, Lyn Alden points out that, although its transaction volume is lower than that of traditional systems, it is comparable to them in terms of transactions per second. She contends that Bitcoin, being an open source and global alternative, has the potential to eventually replace traditional settlement systems which are ineffective with large volumes but few transactions. As a measure of price stability, Lyn forecasts a decrease in its volatility. Although legal issues are more urgent for larger coins, Lyn also anticipates the expanding involvement of AI in the crypto business, which she says will improve efficiency and productivity. Given these circumstances, she is confident about favorable legislative developments for Bitcoin, citing bipartisan support as a positive indication. Alden's study indicates that if adoption increases and regulatory clarity improves, the price of Bitcoin may rise. Returning to the interview.
So I think that like the biggest use case here is international. In the U.S., we generally have fairly good payment systems. Where we run into issues is when we're conducting business across border, and that's where
Right.
stablecoins have been very useful. Some of it has been regulatory arbitrage that, like, things could be easier in the banks as well, but they generally have this more red tape on things. Um, I don't try to judge timelines too much. And like I said, there are Boolean outcomes, legal outcomes, or lawmaker outcomes that I'm just not the expert in. But basically I just continue to be structurally bullish on the market cap of stablecoins. And for what we've seen so far, there are fairly strong liquidity network effects for the leaders. Well, one, I just like to compare the size of settlement volumes because, like you pointed
Right.
out, it is a comically large number. Uh, you know, America's GDP is measured in the tens of trillions,
Yeah.
but actually gross settlement volumes are literally over a quadrillion. Um, and the reason I find that chart kind of remarkable is it's basically the same number of transactions that Bitcoin can do. Basically, it's somewhere around the same number of transactions per second on average.
Mm-hmm.
The
Mm-hmm.
difference being it's not 24/7 and it's permissioned. And so basically, Bitcoin is kind of like a Fedwire, but the global open source one so far are much smaller.
I
Um,
see.
and that's kind of why I made that comparison is that you can build things on top of it. Fedwire handles a comically large amount of processing with a fairly small number of transactions because it's the bottom of a layered stack. I think of a long time. I think, we're 15 years in, and I think over the next 15 years that trend's going to
Okay.
continue of less volatility. Basically, in my view, mainly around it being widely held. If it's
Okay.
something's not widely held, one big player can leverage and blow up and move the market or buy in and move the market. Whereas when you get 5x or 10x more just broad distribution of the asset, you have more.
Mm-hmm.
There's historically been a cycle of distribution where during bull markets, kind of longer term whale holders will trim their holdings into that bull market and all that liquidity. And then during bear markets, generally kind of rotates back to the stronger hands. But every cycle, Bitcoin gets a little bit more distributed, kind of like a startup company becoming a publicly traded company over
Right.
time, growing, get its holder base gets more diversified. And when we hit
Yeah.
a certain point, the volatility just, I think, will diminish over time, and the uncertainty around the asset will diminish over time. Oh, I think it's going to go way higher than it is now. I think one of the biggest challenges is to determine who makes money from this.
Yeah.
So far, a lot of companies, they're kind of questioning, well, are we actually making money from all of the GPUs we're buying? So obviously, the
Mm-hmm.
GPU makers are making money, and the question is, how much money will be made on the other side of it? This could be one of those quiet revolutions where the biggest winners, other than the GPU makers, are the basically just various companies or individuals that have productivity increases from this. And so this is a long-term productivity improvement because kind of like how automation, made blue-collar labor way more efficient. Basically, one worker can do the work of
Right.
3 or 5 or 10 workers. We can see a similar thing in white-collar work, which is that a smaller number of professionals with all these AI assistants can do more white-collar stuff,
Mm-hmm.
and that is a productivity booster for the global economy. I do. I think that's going to be probably a big factor. And so far, we've seen somewhat of an anti-economy of scale, along with an economy of scale, in the sense that obviously the leading models, the leading AI companies have tech that's ahead of their competitors, but then we also find that they're more heavily filtered and moderated to the point where some of their, either objectivity or their usefulness is impaired despite
Mm-hmm.
their technical advantage, whereas some of the more open, more decentralized ones, their
Right.
tech might not be quite as leading edge, but then they make up for it with fewer or more reasonable filters.
Yeah.
And so that seems to be a trend that probably is going to continue.
by selling the majority of its shares in the Grayscale Bitcoin Trust and reducing its holdings in spot Bitcoin ETFs to roughly $189 million, Morgan Stanley has drastically decreased its exposure to Bitcoin. With only $42,000 in Grayscale Bitcoin funds and $188,000 in Pro shares, JP Morgan's exposure is significantly lower. Institutional interest in Bitcoin is still growing, but hedge funds are becoming more aggressive. For instance, Millennium Management has over $1.1 billion in Bitcoin ETFs, including a $371 million stake in BlackRock's Bitcoin fund. London-based Capella Investment Management has also invested over $464 million in spot Bitcoin ETFs. And hedge funds like Elliott Investment Management and 72 Asset Management have also entered the market. Additionally, Bank of America, UBS, and HSBC hold smaller spot Bitcoin positions. Mining Bitcoin has grown to be yet another profitable avenue for investors. Given that the combined market capitalization of the largest U.S.-listed Bitcoin miners hit a record $22.8 billion in June, and that D1 Capital has made significant investments in Bitcoin mining firms including Deer Technologies and Iris Energy, is it conceivable that the price of Bitcoin will rise in light of these developments?